Hello guys, today we will talk about liquidity pools and how to use them in your trading. So let's start. First of all, what's a liquidity pool? Liquidity pool is a higher low or highs and lows where could accumulate some amount of liquidity. How price can react on liquidity pool? Basically, price can react on the liquidity pool in three main ways, and first way is totally ignore that. Second way is to use that liquidity pool as a correction for the main move. And the third way is to do a complete reversal from it. What liquidity pools do we have? We have sessions highs and lows, so Asian high, Asian low, London high, London low. We have previous daily high, previous daily low, previous weekly high, previous weekly low, previous monthly high, previous monthly low, and previous yearly high and previous yearly low. How you can use liquidity pools in your trading? You can use liquidity pools as your entries, as your targets, and as your zero information points. So if first 2 points are, I think that you'll understand them. So with the third point, there may be some problems because I think that for some of you it's a bit unfamiliar thing. So let me explain a bit. If you remember, we just talked about the ways in which price can react on liquidity pools, and basically, if you remember, I said you never know how price will react on some sort of liquidity. So it's sensible to put their zero information point. For example, if you're bullish and you have some targets above previous daily high, still it's sensible to put on your previous daily high zero information point. So when the price will rate previous daily high, you will wait and you'll try to get a bit new information and you'll try to make sure that the market will continue growing. So right now I'll show you how you can use significant liquidity pools in your trading. Let's start. Right now I can see that Asian session accumulated liquidity from both sides. And let's see what does Frankfurt session. Frankfurt session rates Asian sessions high, and London session rates Frankfurt sessions high, and after that we have our break of structure. Our first target could be Asian sessions low, but it's already taken out, and our second target potentially could be previous daily low. So let's see. Price takes out previous daily low. Let's move to the next day. Here I see the work with the liquidity and I see how price moves at bearish order flow. So my target would be previous daily low, and I'm interested in shorts. Frankfurt session rates Asian sessions high and does the break of structure. First target would be Asian sessions high or Asian sessions low, and the second target would be previous daily low. Price rates Asian sessions low and does a little correction, and I will show you that moment. It's very interesting. New York session rates London sessions high and then it rates previous daily low. So let's move on. So let me show you last example. Right now I can see how price moves to bearish order flow, so it works with liquidity and goes down, and our potential target could be previous daily low. And let's see what market gives us in our optimal trading time. Market rates Asian sessions high and does the break of structure. After that it rates previous daily low. Guys, you have to understand that I showed you only one way how you can use significant liquidity pools in your trading. So for example, I use them a bit different, and also you have to understand that significant liquidity pools isn't holy grail. You have to understand context and you have to understand bias, because if you don't understand context and bias, then it will be very hard for you to make money even with significant liquidity pools. Basically, that's the end of the video. Subscribe to our other social medias, subscribe to our Telegram channel because there we share daily analytics. And basically, that's it. Thank you for watching.